What's up traders, welcome back to the channel. Today I have another great video that will blow your mind. I am going to take you through the two trades that I took this week using the same strategy that I shared in my previous video that managed to grow a $20 account to a $134 account in just two trades. I recommend you watch my previous video on this strategy that we'll go through in this video. If you haven't watched, I will put a link in the description or somewhere in this video, but I do strongly recommend that you watch that video right after you watch this video. This strategy is the simplest and the most consistent strategy that I've ever used. So if you have been struggling in trading, I recommend that you forget everything and you try this strategy for yourself. So my first trade was an Audi USD sell, where I started analyzing the market structure to determine the market direction, which is the first step of this strategy, and it is done on the 4-hour time frame. And to do so, you can use whatever tool that is convenient to you. You can use chart patterns, you can use trend line channels, or anything else that is easier for you to determine what the market direction is. It is also key to take note of the market movements. Like in this case, we are making a series of higher highs and higher lows, but the market broke a previous higher low, which was also support to make a possible new lower low. We also mark key support and resistance levels because the market tends to react on these areas. So up until here, you can already kind of tell where the market is headed to, but we are not done with our analysis yet. Be mindful that we are still on the 4-hour time frame. Then we move on to the next stage, which is using our dynamic support and resistance level, which are the moving averages. The moving averages are the 13 EMA, that is the exponential moving average, and the 20 SMA, which is the 20 simple moving average. And our concern is to see the market reaction at these dynamic support and resistance levels, the moving averages, at the support and resistance levels that we have just marked. I mentioned in my last video that we have to wait for the candles, the 4-hour candles, to close below the moving averages for sell and to close above the moving averages if it's a buy. After we have a 4-hour candle that has closed below the moving averages, then we can switch to a lower time frame for further confluences. And here we look for chart patterns and candlestick patterns in line with our bias. So here we have a rising wedge pattern, which is a bearish pattern, but also we have a bearish momentum coming off a resistance level that we marked on the 4-hour time frame. Not only that, we have to make sure that our candlesticks have closed below the moving averages as well. Then and only then, that's when we can enter the market and execute our trades, as you can see right there. So as you can see, I managed to enter this trade, and as analyzed, it respected our analysis. And what can I say? This works all the time. Most of the time I've used this strategy multiple times, and it's the absolute best. I used the similar approach with NZD CHF buy trade, and it gave me this result. That was the first buy on the same pair, but I saw another buy opportunity on the same pair and I executed, and it gave me this result. So guys, this is to prove to you that this strategy works. It is simple, it is beginner friendly, and you can use it with the account of any size. And by the way guys, just to tell you, you don't really need a huge capital to start trading or to be successful in trading. You can have a small account, as you can see in this video right here. You can have a small account and you can just be successful. You can grow it to whatever you want to grow it to. And also you can check out my previous video. I'll put the link somewhere above or in the description below. So that's it guys for this video. I'll see you on the next one very soon.